Well, the financial crisis has taken a tough toll on startup companies. Venture funding for young firms fell 33% last quarter, while first-time investments in brand new ventures stand at the lowest level in 14 years. Well, that's according to the National Venture Capital Association and PricewaterhouseCoopers. Well, Sharon Wienbar is managing director at Scale Venture Partners, which funds mobile, internet, and enterprise software companies. Well, Sharon, thank you so much for joining us. Now, first of all, because it does seem a lot more difficult to then recoup your investment by selling it off, does that mean that you've had a lot less assets to play with?
Well, the venture capital business, as you just said, is down considerably year on year. But many people think that can be a good thing long term as assets leave the market. The opportunity for returns will return. And our firm has been lucky to have 2 big exits in the past week. So it is possible to have strong exits even while venture capital investing has gone down.
But has the landscape completely changed? I mean, before 2-3 years ago, I guess some of these could be put on the market. Now, because the environment is so tricky, you can't really go down that route.
That's true. The exit market is substantially down. And in fact, the 10-year return numbers that are coming out this morning show that the returns for venture capital have diminished greatly in the past couple of years, although they still beat all the public benchmarks. But it is still possible to get a company public or to get it acquired. We had a company, Omniture, acquired by Adobe Systems last week for $1.8 billion. We had another company, ScanSafe, acquired by Cisco Systems this morning for $183 million. Both of those were very strong return deals. So it is still possible. The thing that's different with so much less money going into venture capital investing is that you have many fewer Me Too companies. So in a way, the companies that are funded have a much better chance to thrive and reach a good exit.
Now, Sharon, what kind of things are getting funded?
Right. So a lot of companies are being funded in the software as a service model. So that's where the company delivers software over the internet to their customers. Companies like Salesforce.com, and actually the 2 companies we had that were just acquired were in that model. Companies are being funded in internet content space. I have a portfolio company here in New York called Waterfront Media. That's the largest health destination on the web.
So it's easier if they're not brand new or have some kind of alliance with a bigger name?
Well, there's a mix of both. So the number of first-round investments is down a little bit, but relatively steady. So one of the things you see is when the stock market goes up or down, innovation doesn't really stop. People still come up with great new ideas.
Sharon, I was interested in Waterfront. Now, this is an online magazine. Not online magazines, the paper ones, are not doing so well, but online is the future?
Yes, so Waterfront is a great example of the future of media because it aggregates a whole bunch of people. So it has enormous reach, about 27 million uniques a month. Yet it provides information on healthy living with many different conditions. So you might have rheumatoid arthritis or hypertension. And so it offers consumers really targeted information on how to live with their condition. And it offers advertisers the combination of reach, so that 27 million uniques, it's a lot of people, and the ability to reach the precise people that they need to with their messages about pharmaceuticals or other products.
Sharon, thank you so much for coming in this morning. Sharon Wienbar, they're managing director of Scale Venture Partners, and thanks so much to her for joining us. Well.